Hello, and welcome to VA Money Matters with Ty. I'm your host, Ty, and today we're diving into a critical topic that every entrepreneur, freelancer, and side hustler needs to hear about. Why mixing finances is a recipe for disaster. You've probably heard that advice before. Keep your personal and business finances separate. But what happens if you don't? Today, we'll explore the pitfalls, risks, and long-term consequences of mixing your money. And I'll share practical strategies to avoid this common mistake. So, grab a cup of coffee, settle in, and let's get started. Let's kick things off with a simple question. Why do so many people end up mixing finances in the first place? For some, it's convenient. It might seem easier to use one credit card or bank account for everything. For others, it's a lack of financial education or the assumption that separating funds isn't necessary unless you're running a large corporation. But here's the truth. Even small businesses and side hustles can face serious consequences if personal and business funds are mingled. Whether you're a solopreneur or running a growing enterprise, the risks are real. So what are the dangers? Let's break it down. The first major issue is losing track of spending. When you mix personal and business finances, it becomes incredibly difficult to distinguish between personal expenses and business costs. For example, was that $50 at the office supply store for work or for your child's school project? Over time, these blurred lines can lead to inaccurate accounting. You're left guessing what was spent where, and your financial records are no longer reliable. Poor budgeting. If you can't accurately track what your business is earning or spending, it's impossible to create an effective budget. Mismanagement. When financial records are unclear, it's easy to overspend or miss important opportunities for savings. Keeping things separate ensures transparency and gives you a clear picture of your financial health. Next, let's talk taxes. Before we get into this one, I would just like to give a disclaimer. I am not a tax professional, and I'm not your tax professional. If you need help with your taxes, please seek out a tax professional. And since we're on the topic of professionals, I would like to say I am a financial coach on the way to becoming an accredited financial counselor. So if you need any type of assistance with your finances, please be sure to check the link in the description below. Now let's get back to it. Mixing finances can turn tax season into a nightmare. When personal and business transactions are in the same account, you're stuck sifting through every expense to determine what's deductible and what's not. Here's what can go wrong. Missed deductions. You might overlook legitimate business expenses, which could increase your tax bill. Overclaim deductions. On the flip side, you might accidentally claim personal expenses as business ones, which can trigger an audit. Another is penalties. Inaccurate tax filings due to unclear financial records can lead to fines or legal trouble. By separating your finances, you'll make tax preparation much simpler and less stressful, and you'll reduce the risk of costly errors. Now, this is a big one. Legal liabilities. If you're running a business, especially an LLC or corporation, one of the primary benefits is the legal separation it provides between your personal and business assets. But here's the catch. If you mix your finances, you risk something called piercing the corporate veil. What does this mean? Essentially, courts could decide that because you didn't treat your business as a separate entity, they won't either. This could result in personal asset risk. If your business faces a lawsuit or debt collection, your personal savings, home, and other assets could be targeted. Credibility issues. Investors, clients, and partners may see mixed finances as a red flag, questioning your professionalism and business practices. Protect yourself by keeping personal and business accounts completely separate. Okay, so we've covered the dangers of mixing finances. Now let's talk solutions. Here are some practical steps to separate your personal and business finances. Easy step. Open a business bank account. This is step 1. A dedicated business account makes it easy to track income and expenses, build business credit, and maintain professionalism. And right behind that, you should get a business credit card. Use it exclusively for business expenses. It'll help you build credit and keep spending separate. And some people might even want to use accounting software, tools like QuickBooks or Wave, and one of the ones that I like to use, Monarch Money, can automatically track transactions and generate financial reports. Many of these tools also integrate with tax software. And here's a golden one. Pay yourself a salary. Instead of dipping into business funds whenever you need money, set up a consistent salary or owner's draw. This keeps your business cash flow stable and predictable. Plan for personal and business expenses separately to avoid overlapping or misallocating funds. Now I'm gonna tell you guys a personal story of my own. So when I started side hustling or making money on the side that was outside of my normal way of making funds through my job, at first I did not separate it. I was making all this side hustle money on the side, and I didn't have a separate business account. I didn't have my business formed. I didn't have any of that. So during tax time, it was very hectic to keep everything in line. I mainly used one credit card, but it wasn't a business credit card. And I also used that credit card for big expenses. Maybe an expense came up that I needed to cover right then. Sometimes I would use the credit card for that. So my funds were mingled. I was able to clear all this up and smooth things out perfectly once I separated my side income into an actual business. So I would recommend anybody to go ahead and do that as soon as you start making side hustle money, or if you have something on the side that generates income. It's so easy to separate this by starting a business and having those business accounts. Mixing finances might seem harmless at first, but as we've discussed today, it can lead to a host of problems, from lost money and tax issues to legal risks. The good news, separating your finances isn't just possible, it's straightforward with the right tools and habits. Before we wrap up, I want to hear from you. Have you faced challenges with mixing finances? What strategies have worked for you? Drop your thoughts in the comments below or send me a message. And don't forget to tune in to our live episodes. We actually are up there to help with any financial questions you might have. So make sure you guys tune in. Thank you for spending time with me today on VA Money Matters with Ty. Don't forget to like, subscribe, and share this episode with anyone who could use this advice. Until next time, stay smart, stay savvy, stay financially secure. Peace.